Hey, Amir.
Hi, Ville. Hi, Paul.
Hello, hello. Pleasure to meet you, my friend.
Pleasure to meet you.
I mean, you two know each other, right?
Yeah, since a long time.
Yeah.
So when did you start going to Moby Forum? Did you go to you were in the Helsinki meeting though?
Yes. You too?
Yeah,
2010?
yeah, yeah. Because I was part of the team hosting that. It was hosted together with Tieto and Nordea and Nokia. So we had three hosts, and Tieto was hosting the evening party, the
Yeah.
sauna and the jazz band and the mansion and all that fun stuff.
Yeah.
So yeah, I was part of the organizing committee for the Helsinki meeting back then in 2000, and this was gotta be 11? No, 10.
10.
10,
Yeah.
yeah.
Yeah, that was my first meeting. And just imagine, so at that point, I was just visiting, I was still not officially applied for the membership. And then you mentioned sauna. Um, and from basically being at the table with you guys, barely knowing all of them, all of a sudden I'm in sauna, almost naked, together together
What do
with
you mean almost naked?
well,
You
naked,
can't
yeah.
be almost naked in a sauna in Finland. It doesn't
Yeah.
work. Okay, in that case, Amir, are you ready to go?
I am.
Yes. Ville, you ready to go?
Always.
In that case, let's kick off another episode.
Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sointu. This is Fintech Daydreaming.
Hello, everybody, and welcome back to another fantastic episode of your favorite fintech podcast, Fintech Daydreaming. We have had a fantastic season 6. We are slowly coming to the end of this season, with Christmas coming upon us. The snow has already arrived here in Finland. It is feeling wonderfully Christmassy already, and we're not even in December. So I think I'm potentially gonna start singing Christmas songs soon. But as always, welcome to the show. I'm not alone. I've got with me my fantastic friend and fintech entrepreneur, Ville. How are you?
I'm good as long as you don't sing, because then I'm gonna just leave if you do that. So let's not go there, please. But other than that, I'm doing quite good. I usually don't like the snow when it arrives, but this time around it actually feels like it was a welcome change in the weather because the you get more light essentially. It was getting so dark. So happy to see some snow. I just hope that it lasts until our Christmas break, because it's always nice to have a white Christmas, so to say.
I would generally agree with you, except as you know, I've got a slope going down to the garage at my house, and I've got the need to get the car out of the garage next weekend. So I could have done with the snow coming a week later than it has done, but that's life, right?
Yeah.
We live with the unexpected, and change is the only constants we have in life. So, but let's get on with the show. We have got a fantastic episode lined up. Actually, a close friend of yours has joined us. We just discussed that you've known him for quite some time. But Amir, welcome to the show. Thank you for joining us here. And for those of us who don't know you as well as Villa does, do you want to share who you are, where you've come from, where you're heading, and what your superpower is?
Thanks. Thanks for having me here. Amir Tabakovic. I'm a co-founder of Experiens.ai. It's a privacy-enhancing technology and applied AI consultancy based in Barcelona, so no snow here. My job is to introduce emerging privacy and AI-related technologies and practices to large organizations. And I also teach at 3 different universities in Spain and Switzerland. Before starting this new venture 3 years ago, I spent 10 years in digital banking. That's how I know Ville, and 4 years working for a machine learning as a service provider. And I'm also honorary member of Moby Forum, a global non-profit digital banking industry association, where I'm currently chairing the Privacy in the Age of AI expert group. I think we also touched this briefly in this hour. So happy to be here.
Fantastic. Welcome to the show. And I think we were discussing before we started recording, you two met each other initially through a traditional, normal Finnish sauna experience, right?
Exactly. 12 years ago in Helsinki, that was my first Moby Forum member meeting. And yes, it was really kind of amazing experience to all of the sudden to find myself in the sauna together with, who is who of the digital payment world.
Yeah, we even had Dave Birch in the same sauna, and we had Dave as a guest on an episode a few seasons ago. And again, it's a small world in that sense, but there was a lot of knowledge in that meeting, including in the sauna. So it was a fantastic experience for sure. This was also in the nice time of the year in Finland, during the summer, of course. So it was a really, really good experience. But again, Amir, I mean, I can't believe it's been 12 years. And I just realizing that now when we date this specific meeting. And to this date, we continue to work on together. I mean, we are both in the Moby Privacy Enhancing Technologies Working Group.
Yes.
So authoring some interesting papers, and we'll get to all of that fairly soon. But one of the topics that I realized, so I mean, we both came from mobile banking and mobile payments, and we authored together a few papers on that topic as well, specifically on mobile wallets. But after that mobile payment, mobile wallet time, I suddenly I always remember this when you came up with the idea to start working on predictive analytics, and that was an interesting topic back then. And to me, following your career path after that seems to be that was maybe a starting point when you started focusing on data and what can data do, especially in context of financial services. So maybe we can start there and talk a little bit about, I mean, how did you come up with this revelation and a new track from mobile banking into data-driven financial services?
Yeah. Actually, my journey towards data started even before I focused on mobile banking. Back in 2008, I had this great idea that I thought it's so unique, is to take a bank statement and provide more context to the transactions, spending, analyzing spending behavior. And then I soon realized that this is already, that's not so original. It's called PFM. But that was still early time when it comes to bringing in data visualization in online and mobile banking. So I remember analyzing mint.com that was starting at that time in US. We even found someone in US who was willing to receive $1,000 from us to open a banking account and connect it with Mint, so we could study it. And I even met the CEO of Mint back in 2009 because he was invited to the World Economic Forum. So I used this opportunity because I was based in Switzerland to talk about him. And maybe you remember 2009 was the beginning of the financial crisis, and it was really amazing. This guy just opened his laptop and showed me this admin dashboard of all Mint users, and he could show me the effect of financial crisis to certain spending categories, which was really much better than any central bank could do. It was really real time.
Yeah. So let me just pause you there for 1 second. So first of all, we do a lot of acronyms on the podcast, and we love them. Our audience loves them as well. But PFM, Personal Finance Management, is that right?
Exactly. Is this the premiere for this acronym
Yes.
in your series? Okay, didn't know that. Sorry for that.
No, it might not be a premiere, but we always like to clarify them for in case there's new listeners on the line here. But yeah, so and again another interesting thing to consider here for especially for the younger ones of you in the audience. Remember 2008. People, at least in Europe, didn't really have even iPhones back in these days. So this was a time when Nokia was the ruler of the smartphone world, and everybody had a Symbian Series 60 phone with the ability to sideload some applications. But there was no app store. There was no there was mobile banking in a way, but not even close to what we have today. And it was a very different world back then. And you talked about Mint, and I distinctly remember Mint, especially when I moved to US in 2010. I immediately became a customer. But what then happened with Mint? Just as a bit of a sidetrack, because I don't think they are that relevant anymore.
So exactly that time, 2010, when you joined as a customer, they were acquired by Intuit for 170 millions, I think, at that time. And then it happened what always happens, when you integrated in a large organizations, they just lost the drive. So yeah, that was about it. But that was a starting point even for fintech as a term. In 2008, nobody was talking about fintechs. And I remember, that was exactly the moment when it started happening. Mint was one of the first fintech that was basically, discussed within the industry.
It's quite interesting, the journey of PFM and the use of analytics and cognitive capabilities to help people to analyze their transactional, or more importantly, their financial behavior. But to some degree, it feels like we're still on an early phase of that journey. I mean, you look at most banks and the bank capabilities that you're getting from banks today, the only thing they really give you is the ability to categorize some of your spending. They don't actually give you very much more. So where is this all heading? What do you see as being the super use cases, or the smart parts of PFM and the use of AI?
That's a really good question, because I think the most of the banks that implemented PFM, they just did it because their competitors have done it too. So they don't understand the potential of this information, and how to bring the context in and what to do with it. Providing this descriptive analytics, so just visualizing your spendings, is just the first step towards something that maybe could end up to be, being your digital financial advisor or assistant. But to get there, you have to first visualize your transactions, provide context, then start predicting things. So we are moving into AI, machine learning, building propensity to buy models, forecasting how much will you spend until the end of the month. And then going next step is prescriptive analytics. So basically, how can you make something happen? How can you achieve your saving goals? How can you live a good life, achieving being in balance regarding your finances? So that's kind of a level of complexity that probably we won't reach in the next 10 to 15 years.
And I suppose it gets even more complicated as people start having multiple banks, multiple places to do their financial management. The need of open banking, embedded finance, and open data capabilities become more and more important.
Yes, that's the foundation. You have to be able to aggregate the information across different banking relationships. Otherwise, you're just you're not able to do any kind of meaningful predictions.
So we started this conversation from looking into things like PFM, Mint, and then starting to understand what is the application of different kinds of analytics in this. But outside of PFM, if we move into the AI and machine learning topic, so what do you think are the most relevant uses of this technology in financial services today, and what are the most promising ones you're seeing?
So there are some more complex problems, and then there are some low-hanging fruits. So I think the many banks are still, basically struggling to find the meaningful use case for AI ML, because sometimes it's a vendor driven, someone or consultant driven. They get the idea, let's try to create a huge ROI impact, something, and then they are going for complex problems like, for example, conversational chatbot that is really kind of not the easiest thing to develop, and they often ignore really kind of simple low-hanging fruit use cases like fraud detection model or churn prevention, or next best product things, some things that been working for a while now, and we know how to solve it.
So these easy things, by the way, chatbots. I love to hate chatbots, especially in banks, because to me they seem like very rule based instead of actually having any intelligence behind them. It feels like a quick sticker fix for we did some AI stuff rather than having anything meaningful in place. But let's unpack those cases a little bit. We've had people talk about AI and machine learning before on the podcast, and we also touched on the topic of things like fraud detection, transaction monitoring. But what if we kind of go one level deeper into the fraud detection case? So how would banks go about doing this? What are the kind of low-hanging fruit in fraud detection that you could actually achieve in a good way using AI and machine learning type of approaches?
So I would try not to get too technical, but most banks are struggling because still fraud is still not a very frequent things that is happening. So there is not lots of examples that they can train their models on. So they are basically trying and failing. What they don't do frequently enough is to maybe switch the method of machine learning. So they're focusing on supervised learning, trying to predict some kind of objective field or a target, and they're not using capabilities like, for example, anomaly detection or association discovery technologies, which are more in the unsupervised corner, but give kind of more hints about uncommon behavior of a customer. And that would be kind of something that can help to improve these fraud prevention models.
One quick question on that. Obviously, a lot of what the banks are doing is regulated, right? I mean, AML, KYC. There's a reason for it, not only just to protect the bank and the consumers, but there's a regulatory element to it as well. Is there any regulatory compliance issues that sit on the use of AI capabilities and machine learning within sort of a bank to do these sort of things?
Well, the question is, what do we mean with do these sort of things? If we are talking about the fraud, then there is a legal basis to use this data to prevent fraud. So you don't need any additional customer consent to cover that one. If you want to go more into the marketing use case, then you probably need the customer consent. That's kind of one thing. But then still, this only covers banks in usage of the customer data, basically, their own customer data when it comes to creating predictive models. What is a bit more challenging are the cases where you would like to collaborate with other banks, because normally, this fraud is kind of an issue where a network is also playing a role. The money is being moved around from one bank to another, and there is some missing information, and that's the moment where you have to exchange information, where it's getting a bit tricky from the regulatory view.
Yeah, I think we're leading into the privacy enhancing technologies discussion, but let's hold off a little bit on before we go in there, because there's another thing that I just occurred to me that's very relevant for banks when it comes to the application of AI and machine learning, and that is transparency and almost like ironically predictability. Because I remember having conversations with with different kinds of upcoming regulatory bodies and upcoming regulation when it comes to artificial intelligence application in context of financial services, and one of the more problematic parts was the expectation that that financial institutions and regulated institutions in general should be able to explain exactly how did the algorithm come into the decision that it made and what are the grounds for that decision. This is part of the broader discussions about the ethics and equality angles towards AI technologies. So obviously that is going to be a huge problem moving forward, because as far as I've understood these technologies, sometimes, maybe even most of the times, it's very difficult to understand how exactly was that decision derived, because it's based on so much data. Again, that's one of the reasons why we use machine learning and AI, is because it handles such vast data sets that it's difficult for humans to process. What are your thoughts around those topics?
Yeah, I think it's less a challenge when it comes to data, the amount of data, and it's more a challenge of selection of the right machine learning algorithms. When we decide what kind of machine learning algorithms we want to choose to extract the patterns, we have to do a trade-off. Some machine learning algorithms are better explainable to human, but they have a worse performance, and the other more that we call black box machine learning algorithms, for example, neural networks, everything around deep learning, they get better performance, especially with the large data sets, but the explainability is the issue there. So you have to kind of make this kind of trade-off when you're choosing the algorithm.
Then yeah, go ahead, Paul. If you have something.
Yeah, I was actually just gonna, looking at this from a wider perspective, there is a need for banks to, or any financial institution, to really start looking at how they can take advantage of data, how they can use capabilities of AI to be able to predominantly drive customer engagement, right? And ensure that the customer experience and advisory capabilities are as good as possible. I'm also wondering, though, from a naive perspective, what's the impact if a bank says, actually, you know what, we're not going to go down this route. We're not going to start looking at using AI capabilities and related technologies. Does it mean death to the company?
I can't imagine a future where banks won't use data. I mean, we are already in the area. I mean, banks were one of the first industries to embrace these kind of technologies, first to use classical statistic methods and then expand to machine learning. I think there is no way back there, but we have to be conscious that our data is full of biases, and that if we don't remove these biases, we can create predictive applications that will basically penalize some minorities, some social groups, and this will be kind of a reinforcing effect, because whatever the automated decision is will eventually lead to new historical data that will then reinforce this predictive model in the future.
Talking about biases, and this is another page on the ethics conversation, if you will. How do you then protect from the future that we've kind of had a glimpse to in some of the experiments that we've seen? So everybody knows the example of, was it Microsoft or someone else who released this chatbot or AI bot to Twitter, and then it became very obnoxious very quickly. So again, that's an example of data bias, because even though most people probably are not as obnoxious, but then if you expose an AI bot, then you will get the results like that. I would imagine that in financial services, where transparency and to a certain extent predictability is paramount in order to have this properly supervised, stable infrastructure in place, what are the prevention mechanisms for removing those biases? You mentioned a little bit on that, but maybe kind of double click on that topic.
Absolutely. So I think we're still, the banks don't have processes in place to to remove these biases. This depends on the maturity of each and every bank out there. It depends also on the awareness of data scientists in this regard. Sometimes, we have to resist some temptations to add some data where we don't know how this data was collected and does it contain biases or not. And there is also a price to pay for removal of biases. So this is partly a business decision, because sometimes removal of some biases will come with a cost, with a price tag, and sometimes it's just the question of the skills. Are we able to apply techniques that allow us to first detect biases and then remove them efficiently?
So it sounds like that's another thing to consider. Some banks maybe would consider that as a challenge for them as well, because again, they need to be maybe a little bit better than perhaps than social media companies when it comes to bias removals.
There is an interesting story. I remember a few years ago that I read the blog from a chief risk officer of some Brazilian fintech that was basically providing loans to people. And this guy was super proud at their new predictive application that is basically predicting if someone will default or not. And they said, and then, we just thought out of the box, and then we start collecting metadata from, log files from the servers. And then we noticed that the speed of internet during the process of filling in the form is a strong predictor for, how, your credit rating. And the thing is that what they didn't realize is that the speed of internet connection is actually a proxy for poverty. No? So this is a nice example where you get something. Machine learning will always algorithm will try to find you the pattern, the correlation, but sometimes you're dealing with a proxy and the causation is somewhere hidden and could be something that is actually where it's getting into the direction of being unethical to use this data.
That's a great example, because there's so many things that the AI can correlate with certain things, and to me it's further enhances the discrimination and financial exclusion, if you will, if you start to almost like self-perpetuate those patterns. But yeah, I think that's a really big topic to address for sure. But in order to have a little bit more broader perspective into all the issues with data usage, machine learning, and AI in banks specifically, what are the other things preventing banks from actually moving into more effective usage of AI and machine learning? And I'm sure we'll lead now into the privacy enhancing technologies bit.
Sure. I think it's really the data literacy is one of the huge problems. If you look around and you remember the time when we were starting the predictive analytics expert group at Moby Forum, it was difficult to recruit and find people who are interested, because this was a very isolated topic, and normally only data scientists were working on that. But the most important stakeholder in development of this kind of application are subject matter experts. People in business who understand the business problems and And that's kind of the first step before you start looking into data. I mean, the first step is understanding the business problem. Now, what we have normally at the banks, you have, on one hand, we have data science, analytics departments, and then there is a gap, and then you have a subject matter experts. And we have to find a way to bridge this gap. Some banks are introducing a role of analytical translator. This is a person that basically tries to be, good in both disciplines and is really kind of bridging this gap. Because if the gap exists, data scientists will probably pick the wrong business problems to solve, or the subject matter experts will not understand what is happening, will not accept the new ways of solving some business problems, and everything will remain the same. There is no, we have a 85% is a failure rate of AI project. So, you can imagine we still have to invest a lot in this kind of a data and AI literacy.
It seems so similar to so many other topics. We talk of blockchain a lot, of course, in this company, in this podcast as well. And in many companies, people establish their blockchain centers of excellence or blockchain innovation labs, and then they almost desperately try to find business problems to solve with a technology that you already have set in stone before you really looking for those problems. And it seems like this pattern is almost like repeating itself also on AI and machine learning side.
Absolutely. There is this kind of, sorry.
I was just going to say, it actually, like you said, Ville, it sounds like the traditional business IT gap, right? Where there's a lack of understanding or a need for translation between the business language and the IT language, and the understanding on the two sides of that coin.
Yeah. I think that one of the challenges is that the way that machine learning AI is solving problems is, 180-degree different than we are used to, and we are trained and we are educated to solve problems. I mean, in the normal world, we are surrounded with expert systems, and expert systems, they start with the expert, and the expert is someone who knows how, a process should run and defines this. And then there is a programmer who basically then codes everything, puts it in code, in an algorithm. And in AI, ML world, this is completely, upside down. You replace the expert with data, and you replace the program with machine learning algorithm. And the idea that actually, you will start at the end, you will look at the past output and learn from that output and then define the rules is completely opposite, because in the school we learn that first you formulate hypotheses and then you prove the hypothesis. But in this case, we have to go completely the other way around. We collect the data, we apply machine learning algorithms, and we extract the rules.
That's a really interesting observation. I've never actually thought about it that way, but now that you say it, it actually makes a lot of sense. And it also sounds like we're getting a good list of problems and some suggestions on how to attack those problems from the conversation already. So we started off from regulation, we moved on to ethics. Now we identified the governance and basically competence in organizational competence, and how you structure the organizations around these topics to make sure that you are more effective, and indeed understanding that the mechanics of solving these problems is a different one when you're using AI and machine learning. But I'm sure this the list is a longer one. We also, by the way, identified one way to start to tackle these organizational problems, which was this the role of a translator, and I like that. It's always a very effective way to have people who understand both the business side, the problem side of the equation, and also the technology, to the extent that they're able to make the connection between these two parts of the spectrum of problem solving and solutions. But beyond that, so what is the fourth item on the list, if you will, for things that banks need to consider when they want to employ effective machine learning applications?
Should we switch to privacy?
Yes, exactly.
Yeah, sure. I mean, the privacy is a huge issue. I mentioned that I spent 4 years working in different machine learning projects, on the side of the vendor that provided machine learning platform. And one of my discoveries that during that 4 years is that sometimes even after managing to solve all the previously mentioned problems, you still realize that getting your hands on the actual personal data of your customer is something that is almost impossible to do. And then that data becomes bottleneck, and then data provisioning takes, in the best case, 6 months. And then if you want to do something, you have to go through this cumbersome process, talking to the data privacy officer, talking to the information security officer, talking to this and that. And basically after 6 months, you just lose any motivations to do anything, because in each and every step, you just basically have to sign off that, whatever happens, you will be blamed. So that's like this legend about these monkeys and the water and the banana. When you try to reach with the leather bananas, you get the cold shower. This is kind of the same story. Within the banks, employees are trained to get the cold shower every time when they try to do something with the customer data.
Yeah,
I think I need to find a story about the monkeys and the bananas and the cold shower now. But yeah, sounds interesting, getting a cold shower. Yeah.
yeah, I'm starting to get PTSD here. Post-traumatic stress disorder, by the way, for listeners who are not familiar with acronyms. But
No. Yeah. No, the story, I don't know if it's true story, but it says that they made an experiment with the bananas that were hanged on the ceiling, and each time when someone tried to climb to reach, they got the cold shower, and then they start gradually replacing monkeys with other monkeys, and each time when the new monkey started to climb, they get the cold shower. People got annoyed because everyone was punished for the monkey that was not aware of the culture. It is a kind of a culture story. And at the end, it came to the moment where all monkeys that were once showered were replaced with a new monkey, but still the culture developed and nobody was climbing the ladder, because it's a culture.
So in order to fight that type of culture, so there must be another mechanism to getting those bananas. And the other thing that just occurred to me is that it's not only getting access to the data that you might have inside your institution, it is getting broader access to data. Is it? Compared to like the big techs who can basically get their hands on pretty much anything with limited or no consent. In financial services, that is supposedly much more complicated. So how could this dilemma then be solved, or at least try to solve this dilemma?
Yeah, well, that's the good moment to introduce privacy enhancing technologies. Privacy enhancing technologies are basically trying to solve exactly this dilemma. So you can imagine it's a combination of different computational or mathematical and statistical approaches that try to extract data utility while at the same time preserving the privacy of the information. So it's kind of like having a cake and eating it too. And the two main threats that you're trying to prevent, the one is that the breach of trust. So the more stakeholders are involved in this kind of a project, or then maintenance of this kind of product, the more risk there is that someone will be a bad actor and will do something with this data. And the other is re-identification risk. Sometimes you think maybe I can anonymize the data and then use it perfectly within my project. But then you find out that the techniques that you've been using for anonymization are, easily breached, or there is an easy way to re-identify, especially by using AI nowadays. So these new technologies, privacy and ethics technologies, are trying to solve, to find a solution to mitigate or reduce completely these kind of risks. And we have,
No, sorry, I didn't mean to interrupt you. Please
go ahead.
So we have different pets, and different pets are serving different, are trying to solve different problems. So when it comes to re-identification risk, so that the risk that the customer will get re-identified by someone that shouldn't, re-identify the customer, we tried to create data which are fully anonymous, because if something is data is fully anonymous, you're basically outside, you're exempt from any kind of privacy regulation. And one way of doing it is, for example, to use AI-generated synthetic data. So to replace the real data with a fake data that has the almost same statistical properties and is basically almost as good as real. Or you want to have guarantees that whatever you create in your analytical process doesn't allow someone to identify a single user which was within this data set. Then we are using a thing called data differential privacy. And then there are other techniques like homomorphic encryption or confidential computing if you want to process data in encrypted state, or if you want to do decentralized processing of the data. So for example, different banks are working together on let's say a fraud prevention model, then there are techniques like secure multi-party computation or federated learning that could be used, just to name a few.
It's interesting. I don't even profess to have an awful lot of knowledge about this domain. I mean, that's why we have experts like you join us on this podcast. But I had a discussion with someone a little while ago around the anonymization of data to be able to make it usable in different contexts. And what they were saying to me was, if you anonymize small amounts of data, it's very generic. But actually, even with anonymized data, if you get enough volume, you can actually, with that data, be able to start to re-identify individuals again. And therefore, you break the privacy model that you're trying to actually preserve.
Exactly. So when it comes to anonymization, the big data is a problem, especially the more attributes you have, so more features you use, the more difficult it gets to anonymize a data set. I think I can recall few of, there were some experiments. I was also participating with the one bank, with one client at the Experiens, where we basically just used 2 attributes out of the entire data set, and that was the point of sale, the location, or this as an identifier, and the time of the purchase, and that over entire customer base. And just by looking into these 2 attributes, we were being able to uniquely identify 70 to 80% of the entire customer base, because there are not 2 people that will have 2 exact transactions at the same time at the same POS. So at that point, now you have a data set where you don't know who it is, but you know that he's unique. You're able to recognize him, as a pattern. And then all it takes is just to add additional data source where this data point is appearing, but also has some personal data, and you identify everything.
So we're talking specifically about synthetic data. This is something that we always get when starting to talk about synthetic data, is that, so understanding everything you just said, but ultimately, if synthetic data is generating or it's creating data based on the same user patterns as you would have from a real environment, how does it then prevent from the correlations from being transparent still? Effectively, what is the magic sauce that it adds compared to just obfuscating the usernames. Because again, if you apply the patterns, doesn't that imply that you also apply the possible correlations in the synthetic data? So what am I missing here?
So to understand how the synthetic data is generated, you have to imagine that you have real data, and then you basically train an algorithm to learn all the patterns which are hidden in this data and to generate new fake data. It's like this generative AI applications that basically creates Van Gogh painting or something, based on the training of previously, on other Van Gogh paintings. The thing is that you have to be just careful not to overfit with this training. You have to stop at certain level where the data utility is extracted, but not in the way that you generate exactly the same customer on the other end. So each and every synthetic customer, there is no one-to-one relationship between a synthetic customer on one end and the original customer on the other end.
So taking a loop, sorry, Ville, just very quickly, taking a loop back to what we were discussing earlier, again, demonstrating my lack of insights and knowledge into this domain. If you're using AI to generate synthetic data from actual data, is there a risk that the AI can start putting biases in place as it's generating this synthetic data?
Absolutely. It can also reinforce, it will. So the one thing is to reinforce the biases which are already in the data. That's the one thing. And the second thing is the topic that we were talking about previously, explainability. You have to understand, be able to understand how this is normally, how the synthetic data is generated. So you need some kind of a legal and technical assessment to be able to understand and to exclude this possibility that there is some kind of bias introduced. But normally what you do is you basically take the original data set and the synthesized data set, and then you try really to compare it and make a quality assessment and try to detect anything that shouldn't be there, or to detect that there is, that the synthetic data are not matching good enough with the original data, or that you're able to re-identify someone. These are some kind of standardized, more and more standardized quality assessment, methods that you basically have to do each time when you synthesize.
Okay, so rounding up the discussion a little bit here towards the end of the episode, but let's get to the point you mentioned when we started talking about privacy enhancing technologies, and that is the fact that this is like having the cake and eating it at the same time. So best of both worlds. So as always, the banks always think that if it sounds too good to be true, it probably is, and then they will start to find reasons not to do things. So what have you seen? What are the main obstacles of starting to employ these technologies? I mean, obviously they are still quite new, so it will take time to make them efficient enough and things like this. But from a let's say governance standpoint or adoption standpoint, what do you think are the main things we need to do next to make sure that financial institutions actually get to enjoy the benefit of these technologies?
Yeah. So first of all, it's very difficult to prove the value of these enabling technologies. All of those technologies are basically enabling technologies, and as long as you have a very, you're basically already have risks in the system. There is no base. It's the banks are not aware of many of the risks that they have, so there is no baseline that you can compare it against. It's, you will face these arguments, why should we do something? It works pretty well, right now. Or why should we do it? It looks like, it more work for someone. It's a new component. It adds complexity to the already existing process. That's sometimes an issue. Another thing is that bank, the pets are very complex because it's an interdisciplinary topic, you need some understanding of let's say data science, then cryptography, then basic hardware technologies at certain point, and then up on the top of that it comes the entire legal perspective, information security perspective, and there is very difficult to find kind of a single driver within the company, someone who is pushing this forward. So you have to try to assemble teams of different stakeholders within the company that are able to together grasp what is the benefit of this.
Unfortunately, we are running out of time. As we always tend to do in these episodes, we get so stuck into the discussion and want to keep going, but time is running away from us. As we sort of start to round up, Amir, is there anything you feel that you would have loved for us to have discussed, but we missed? Any last points from you?
Yeah, no, actually not.
No?
I think we could get lost in many of the subjects we touched.
Yes, absolutely. Okay, well, in that case, we are going to round off this fantastic episode. Actually, before we do, one of the things that Ville and I like to do is to bring some humor into the episode. I tend to do it at the end, and we invite our guests to share a funny story or a joke or something with our listeners. You've got something of humorous nature you'd like to share with us?
Actually, yes. I was basically I prepared myself mentally that I have to say a funny story because I was warned, and I'm also a listener of your story of your podcast. So few years ago, I had to step in for a client in an innovation steering committee that was assessing different internal innovation ideas around payment. And there was one, so I had to do pre-readings, and there was explanation of one idea that said that we want to do a research on subcutaneous NFC chips, that are basically placed under the skin. And the reason why we want to do that is because in European Union, in 1 year from now, all newborns will be mandatory chipped with the NFC chip. And that's why we should try to see what is the potential for payments. And I said, well, if this is true, I should probably have heard about this, and people would be on the streets, demonstrations, burning containers. So I followed I found the reference to this in the text, and I went to this news portal. And it looked a bit strange. So I went to About Us. And in the About Us, it stated, if you only for a minute believed anything on this information portal, you should you have a serious problem. So, and at that time I was about to intervene, but at that moment, I was contacted by the chair of the steering committee that says, we don't allow anyone to step in for an original member of the steering committee. So, you're not invited. And I said, well, okay. And then the next day I called this guy and asked him, can you tell me, what happened with this idea? And he said, yeah, it passed. And I said, I'm really not such a bad person. I would tell you, go there and check this. And then, I still had the link to pre-readings because it was in my mailbox. And 2 days later, I went and looked at that, and the document was still the same. Only the one reference was missing, the reference to this information portal. So the story continued.
Well, I'm actually really glad that it wasn't true. I mean, the idea of starting to put chips into newborn babies sounds scary, although maybe it will be part of the future. We've seen enough sci-fi movies that suggest that, right?
Yeah,
I think this story will now a lot of innovation in the financial space suddenly makes sense now.
Sure. And if you're a startup that didn't manage to sell a great idea to bank, you should feel miserable after hearing this story.
Love that.
Well, that's fantastic. Thank you, Amir. I actually, if you've got the link, you'll have to send it to us. We'll have to share the link to that website. But anyway, as I said, thank you very much for joining us. It's been a fantastically good discussion. I've learned an awful lot. I hope our listeners have learned a lot. If you haven't, then Amir, how can the listeners contact you to find out more about you or privacy enhancing technologies or what your company does?
So you can contact me via email, amir@experiens.ai, and I will be happy to start the conversation.
Fantastic. You heard it here, guys. Contact Amir. He will give you all the insights into privacy enhancing technologies and use of AI in banking and financial markets. But we come to an end of another episode. So thank you very much, dear listeners, for sticking with us. Hope you've enjoyed it. As always, hit the like button, pretty please. Leave us a comment, pretty please. And if you really have enjoyed this, subscribe as well, pretty please. Without you, we have no show. We just talk to an empty room, and that is a sad thing for Ville and I, to put all of this effort in, all of our own time, get all of these fantastic guests to come and join us to talk about their passion, what makes them burn, and to share that with all of you. So let us know how we're doing. Leave us a comment, leave us some feedback, and tell us what we should be focusing on in season 7 after Christmas. Although we have one more episode yet to go, which will come out in 2 weeks' time, where Ville and I, as traditionally, without a guest, will sit there, drink a Christmas beer, and share our thoughts and views on season 6 with you all. In actual fact, if you want to, send us a message and tell us what has been your favorite episode in season 6. And maybe we'll give you a shout out and a Christmas wish in that last episode. Until then, this has been Fintech Daydreaming.
This is Fintech Daydreaming.